guys, welcome to today's video. The topic of discussion for today is going to be about Bollinger Bands. Bollinger Bands are something that I quite enjoy using and I've used pretty much ever since I started trading. There's something that can be very useful if used in the right way, and so today I'm just going to be talking about how and where to use them and where not to use them, because I think a lot of people get confused on that part. So first we're going to start off with what exactly are Bollinger Bands. So Bollinger Bands are these, lines that you see above and below the candles. And basically what they do is they kind of act as makeshift support and resistance lines, and that help you predict the next movements of the candle. Now, an important number to know is that 90% of all candle movement happens within inside these Bollinger Bands, okay? So as you can tell with that number, that's a pretty big number. So usually when you have movements outside of the Bollinger Band, like here, more or less they're going to reverse to go back inside the Bollinger Bands, and that's where they become very useful trading in a consolidating market, especially. We're going to talk about that a little later on. But yeah, so Bollinger Bands, very easy to use, very helpful too. So I suggest if you guys are looking for some good, easy to use indicators that'll help you out, Bollinger Bands is definitely something that you want to keep in mind. So what I wanted to touch on next is the three stages of the market and where it is best to use them and where it is best to avoid using them, or you can still use them in that stage, but just take with a grain of salt. So the three stages we have are the retracement, consolidation, and breakout and or trending stage, whatever you guys want to refer to the last one as. And so I drew kind of like a makeshift chart here. So this would be the candle movement I'm referring to as these lines. Okay, so the consolidation stage is where the candles are moving in a fairly regular up and down motion and aren't really headed in one clear direction. They're kind of just bouncing off the same support and resistance levels and floating, as I like to refer to it as. So this would be a consolidation stage, as well as a little bit of a consolidation stage right here. So once again, you guys can see, some makeshift support and resistance levels. It doesn't need to be anything serious. Like if it passes the support and resistance level, like right here, it's still a consolidation stage. It's just where it's fairly regular movement. Now, the breakout and trending stage would be, as you guys can see here, it's pretty clear to see the breakout and trending stage. It's this guy here, as well as once it's basically any clear direction that the market is moving in is the breakout and trending stage. So it's best to use, and this is what I found, and no one ever really taught me this, and I think this is an important topic to touch on when referring to the Bollinger Bands. It's best to use the Bollinger Bands in the consolidation stage, okay? And I'll touch on why. But in my experience, I have just taken with a grain of salt every time that I am in this breakout trending stage when referring to my Bollinger Bands, okay? So I'm going to touch on why. Okay, so as you guys can see right here, we have a little bit of a consolidation stage, okay? So as we have referred to last, there's kind of some makeshift support and resistance lines, nothing too crazy, and it's just kind of bouncing off the opposite direction every once in a while and not really headed in a clear direction. Whereas right here, right, it's a little bit more of a breakout stage, not quite, because it's still consolidating a little bit. But we'll just focus on this area for now, a consolidation stage at that. So as you can see in this consolidation stage, for the most part, every time a candle has pierced these Bollinger Bands, it's reflected off and gone in the opposite direction, right? Okay, so that is a very good sign when you're wanting to trade, when you're doing your PMA, your pre-market analysis, and looking at market conditions. If you see that whatever, like let's say you're trading Aussie dollar or whatever, and you see that you are in a little bit of a consolidation stage, you want to take into account that your Bollinger Bands are going to be fairly useful here, okay? Now, if we go up into a trending market, you guys might already see what I'm referring to here. The Bollinger Bands have pierced it 1, 2, 3, 4, like pretty much every time here, and has not gone in the opposite direction, okay? So this, obviously, this indicator doesn't always perfectly describe the next move that the market is going to make, but it is very useful in a consolidating market where once it does pierce, for the most part, it heads in the opposite direction. Okay, so here's a good example of another consolidating market. So it's, as you can see, kind of bouncing off this support band here, and it goes up to the resistance band, and so forth, and continues to kind of bounce off these bands. Now, if I can find, like, let's say here, a little bit of a trendy market, as you can see, it's piercing these bands, but it's not necessarily bouncing up right away, right? So you kind of want to take into account when you're trading and doing your pre-market analysis, are you in a breakout or trending market, or are you in a consolidating market? And if you're using Bollinger Bands, then consolidating market is best to trade in, okay? Breakout market is, you can still trade in the breakout market with Bollinger Bands. I've seen some people do it, but you need to take the indicator with a grain of salt when you're doing that, because as you can see here, this consolidating market, it's pretty much perfectly, the Bollinger Bands are perfectly describing the next movement of the market. Another quick example of trading in a trending market with Bollinger Bands. So as you can see here, piercing the Bollinger Bands, heading up a little bit, a little bit of a reversal, but once again going back down, piercing, not necessarily heading up all the time, and reversing as the Bollinger Bands would tell you. Same thing here, right? Pierces, continues to go down and piercing the Bollinger Bands. Exactly same thing here and here and here. So once again, if you're using Bollinger Bands, which I think is a great indicator, and I suggest a lot of the new traders who are looking for an easy but effective to use indicator to use, you guys need to realize if you're trading in a trending market or consolidating market, and preferably wanting to trade in a consolidating market. So the last thing I wanted to touch on, and I think this is pretty important for a lot of people that are starting out, and I think that might get a little confused, is so when you're doing your PMA, and let's say you're marking down your support and resistance levels on a 4-hour chart, and you notice that the market condition is in a huge trending pattern, okay? And like I previously said, Bollinger Bands aren't the best to use in this market condition. And then you go, let's say you switch to your entry chart, and it's your 5-minute chart or whatever, right? And you notice it's in a little bit of a consolidating market, where it wasn't that huge trending market that we have noticed on the 4-hour chart. So what do you do? Do you listen to the 4-hour chart where you probably shouldn't use your Bollinger Bands, or do you listen to the 15-minute chart or your entry chart where it is okay to use your Bollinger Bands? So from my experience and what I take into account the most is your entry chart, okay? So let's say your 4-hour chart is consolidating, good to use Bollinger Bands in, but your entry chart is not consolidating, it's in trend. I would listen to the entry chart before your support and resistance chart, just because if you're doing high frequency trades like I like to do myself, I like to scalp, then you're going to be in and out, and you're not going to be in for 4 hours, so the market condition isn't as important, okay? So last example, you go into your support and resistance chart, and you notice it's in a perfect consolidating market where there's clear cut support resistance levels, and it's looking really good for the Bollinger Bands to use, right? You got your resistance level and support level there, and it's looking really good. You go into your entry level chart, and you notice huge trends. What I would do for the most part is avoid using Bollinger Bands, okay? You know, and that's just my personal preference. Like, I like to trade in consolidating markets anyway, so I would avoid using that for the most part, unless like the market's giving you free trades in a trending market. And it's pretty much throwing money at you. Then at the odd time, I would trade in a trending market. But for the most part, I listen to the market condition on my entry chart while still taking into account my support and resistance chart. Okay, guys, I think that's all I wanted to touch on today. Thank you for watching. If you have any questions, please feel free to leave them in the comments, or my email as well as my Instagram is in the description, and you guys feel free to message me and I can chat with you guys one-on-one. But yeah, thanks for watching, and I'll see you guys in the next video.